Assalamualaikum, everyone. Today is November 21st, 2021. Welcome to Wall Street to Bay Street Sunday Chai with Cherry Portfolio Canada. My name is Nadeem.
My name is Shamil. Get your chai ready and let's talk about the markets. So Nadeem, we saw a pretty big tweet from one of the biggest celebrities in the world, Elon Musk. He had a tweet recently that said, talking about if he should sell some of his Tesla stock. And this is considered insider selling in some sort. So I had a question for you. Can you maybe walk us through insider selling and tell us what this could potentially mean for Tesla stock?
Sure, absolutely. So insider selling is basically a term that's used when there's an individual or a major shareholder of the company. That normally means somebody that owns 5% or more of the company's stock, and they're deciding to sell their shares. What they typically have to do is they do have to file, a registration with the securities regulators. So in the U.S., for example, Elon Musk, when it comes time for him to sell his shares, he has to file with the SEC. It's not like any other retail investor where they can just call their broker or go online and sell the shares. He actually has to go through a formal legal process to sell it. So now, normally, in a situation like that, insider selling, is it good or bad for the stock? Insiders more often than not will sell their shares for the simple reason that what you do tend to have is founders of companies, CEOs that have, that really own the majority or a good chunk of their shares. As the company grows, they tend to kind of diversify their wealth that they've accumulated with the success of the company. So insider selling tends to be, not an unusual activity, so to speak. However, there have been instances, for example, the one that I can remember famously is Enron, where before that whole scandal really hit the surface, there was a period of major insider selling going on. That would be a situation where, the red flags would have came up. But in a situation like this, where you see a CEO that has held on to his position for a very long time and the stock has done extremely well, that would be a situation where, he's just taking advantage of the wealth he's accumulated and diversifying it out to something else.
Perfect. On the flip side of that, we hear the term insider buying. So can you maybe walk us through the opposite of that?
Sure. I mean, it's exactly the opposite. So that would mean that, we're looking at a situation where insider, meaning a CEO of a company or somebody, again, who owns a majority, 5% or more of the company, will start buying the shares back. Now, in a situation like that, you will, these insiders, they still have to formally file with the securities regulators when they make that transaction. Now, typically, that does tend to be a somewhat of a bullish indicator, in the sense that you have somebody that's very close to the company that is kind of, in some terms, putting their money where their mouth is and purchasing the shares. It could just be, it typically is something that is viewed bullish, because as it is, most insiders already will have a position in the company. So what they're really doing is they're adding on to it. Again, it's not a sure thing. It's not a guarantee that the stock, the company's shares are going to go higher, but typically it is viewed as a bullish indicator when you do see insider buying.
See, now that we've talked about certain individuals of the company buying it, we also see another thing that's called stock purchases plan. And that's when the company, obviously buys its own share. So can you maybe walk us through what potential impacts that could have on the stock if a company is buying its own shares back?
Sure. So, I mean, stock repurchase plans have been pretty huge in the marketplace, especially the last 10, 15 years. And typically what that means is, when companies have money, when they're sitting on a pool of cash, for example, there's a few options they can do. Number one, they can take some of that cash, pay it off as a dividend. They can also take that cash and maybe reinvest it back into the company, whether it's, buying property and plant, or, capital expenditure, or even buying another company and making an acquisition, right? And the third option is that they simply take that money and they say, we're just going to buy more shares of our company and kind of basically take it out of the float in the market. And in a way, what the company might be saying is that, we think that we can make the best use of this cash by buying our own shares back. It does I guess take away some of the shares that are floating out there. So and when you have shares that are getting not diluted but the opposite, it is something that is, again, viewed bullish, similar to insider buying, where you have somebody who's close to the company that is buying their own shares back. Some people make the argument that the company knows itself better than anybody else, and now again they're also putting their money where their mouth is, and buying the shares back.
So now that we've talked about insider buying and insider selling and the stock purchase plan, one term that gets thrown out a lot is insider trading. So can you maybe walk us through what that term means?
Yeah, so insider trading is an illegal activity. This is an activity where somebody has got privy of some information that is not made public and is acting on that information. So I guess the best way to explain that would be an example. For example, if somebody knew the CEO of a particular company, that CEO advertently or inadvertently, for example, passed some information on to this individual, and that individual at that point took that information and acted on that by either buying or selling those company shares. That is an illegal activity that can result in jail time, fines, or whatever, and it's separate from the insider buying and the insider selling that we previously talked about.
Perfect. Thank you for all the information again today. And for all our viewers, thank you so much for joining us. And if you do have any other questions, feel free to put them in the comment section below. So from Nadeem and I, thank you, and we'll see you next week.
Thank you. Assalamu alaikum.
Nadeem, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.